Adhikeshan, Shyamjit, Vinodji, all the participants, of course, Arvind, who is the coordinator, who is the initiator of this program. One small correction, Arshia, I retired as CGM. I think you have seen my LinkedIn profile, older LinkedIn profile. That is not functional now. I was in Calcutta in 2014 to 2016 and retired in 2021 as CGM of Jaipur and subsequently from Delhi circle. So it is my distinct pleasure to welcome you all to this enlightening course on banking law and financial regulations. And as a student of banking throughout 36 years of my career, I always used to hear banking law and practice, what Adhikeshan sir has also referred to. So law and practice. Here, when I saw only banking law and financial regulation, I was happy. Because when we talk, we always used to have a separate practice than what has been laid down as a guidelines. And that is the root of all crisis. When we deviate from regulations, when we deviate from law, then the crisis happens. So I think your course has set the tone very right, that you have removed the word practice and you have only concentrated, focused on banking law and financial regulations. As a professional navigating the integrating world of finance, I think you must realize that the financial stability is as important. Banking and financial stability is as important as a democratic setup of a political system. I am relating to that because for a successful democracy, we have four pillars: executive, legislatures, judiciary, and the fourth pillar there is media, which keep a watch, hawk's eye on those three pillars. In banking and financial system, there are also four pillars. Executives, who are responsible for corporate governance and management of the bank and financial institutions. Legislation, which is being laid out by regulators, various regulators, and you know, there is a Reserve Bank of India which basically regulates banking and non-banking finance companies and other financial institutions. Then there is a SEBI if it is a listed. MCA, of course, State Bank is separate from MCA because the State Bank has been created by SBI Act. But there are various kinds of regulators and there are various kinds of law enforcing agencies which give the feedbacks on their findings to regulators to upgrade the law time and again. Recently, you might have seen a lot of regulations coming from Reserve Bank of India, tightening the regulations that which is impacting the financial system this way or that way. I'm not saying adversely, I'm not saying positively, but yes, regulations are coming to enforce some kind of tightening. So this is very important aspect. The third is judiciary, of course, because judiciary, or I should add quasi-judicial authorities also, with the NCLT, with the various regulators, appellate authorities, with tax laws, with GST, everything. Banking and finance is not untouched by any of the institution in this country, and particularly for public sector bank, there is a CBC guideline. There are agencies which are also basically scrutinizing whatever bankers are doing. So there are various eyes on one institution, and we have to be very, very careful as a banker to follow the regulations and laws strictly while discharging our duties. And sometimes mistakes happen, and then we seek legal remedies to that. And that's why when a professional lawyer is having all the ideas about the regulations, they are equipped about that. They give a very valid opinion and suggestions, and they are our rescuers. So the fourth pillar, which I'm talking of in this financial and regulation thing, is the pillar of the lawyers. No media, but the lawyer. And that's why your knowledge, your equipping yourself with the regulations and laws are very important, because we know banking, we don't know law. As a banker or as a someone is dealing in forex, so he knows the regulations or he knows the art of dealing, but he doesn't know FEMA law in deep. He may be knowing the broader guidelines or SOP issued by the institution, but he may not be knowing the deeper laws. So this is very important to know, and I think the course is addressed to help you all out towards this only. The banking industry, if you say in India, has evolved technically after independence. Prior to that, yes, we were having few banks privately owned by uh, big houses. And in 1969, nationalization came. Prior to that, there was only one commercial bank, and which was owned by Government of India through Reserve Bank of India, that was the State Bank of India. And the State Bank of India is different from other banks in a way that SBI has been created out of Act of Parliament, whereas all other public sector banks are nationalized in 1969. The purpose of nationalization was to make these banks responsible towards the weaker section of the society, to do something for them, which was not earlier the criteria for them. So that has helped. It evolved. And slowly, Reserve Bank of India also learned the art of managing various kinds of banks. And there are RRBs, there are cooperative banks. So it's a scheduled commercial bank list, which RBI deals with different. They are trying to align all the regulations now. They are trying to have one set of regulations for each bank. But I think still there are separate setup still existing for cooperative banks, for regulating rural banks, RRBs, regional rural banks, commercial banks. And if you know, I can tell you, Adi has touched upon that area of digitization, fintechs. For example, I'm giving you the fintechs. The fintechs are not regulated directly by Reserve Bank of India. They are regulated differently. They are given license to operate by MATI. But they mostly deal with finances, and hence some kind of issue cropped up. Like BNPL lending, you might have seen RBI has basically closed that window. There are day-to-day regulations coming up which affect fintechs. Recently, you have seen Paytms. Paytm as an institution is not getting regulated by Reserve Bank of India, but Paytm Bank was being regulated by Reserve Bank of India. So Paytm is the fintech which owns Paytm Bank. So RBI put restrictions on Paytm Bank, for they found something which was not aligning with the regulations of the prescribed regulations of RBI. So why this is very important? You all might have seen the crisis, the Asian crisis of 1999, 2000, 2002. The US crisis, 2008 crisis, everyone is aware, because I think even the youngest person in this group maybe have heard about that, might have heard about that. And that impacted Europe and US more than Asia. You might have heard about many crises in India after 1991, scams which impacted financial sector. You might have seen in recent years failure of banks because of violations of prescribed guidelines, not following the prescribed guidelines of asset quality or other things. So this is very important. This aspect is very, very important to keep in mind, that whatever regulations are there, this needs to be followed, because stability and integrity of system is very important. The other thing is, it helps us in managing risk. Now, in every banking institution or financial issue, mostly they are listed entities. So there are a large number of stakeholders. It's not only promoters, or it's not only a few shareholders. It's customer also, which gets impacted. It's a large number of public participation in the shares is also happening. So they also get impacted. It's the image that gets impacted. Reputational loss is there. So managing the risk is very, very important aspect. And unless we know the law, we know how to manage it, we know where we are deviating, how to plug that loopholes. That is very important. You have seen in recent years, one word is very important, one terminology, that is AML, anti-money laundering, isn't it? And I don't think that before 10 years ago, even if ED was existing, people were not much aware of that. Enforcement director exists since long. But the international community, when they started imposing AML norms on each and every country which were member of OFAC, and they gave timeline that you have to basically follow these regulations and you have to report. FATCA we never heard before, I think 16 or 17. FATCA came only in 15 or 16. So FATCA was not prior to that. Now we have to give FATCA also. We have to submit our details to US agencies also. And for Russia and other bloc, there is a other concept. So we as a banker, we have to follow international regulations. And with liberalization in 1991, which globalization we call it, foreign regulators also have an eye on Indian entity, because if we want to operate in their country, if we are dealing with their entities in our country, they also want that their regulation should follow. So if we, like SBI, is present in 127 countries almost. Am I right, Adi? Almost 84 countries. So if SBI is present in 84 countries, the State Bank needs to follow the regulations of 84 country regulators. And you can imagine aggregation of those laws, common laws and separate laws, is how a difficult task. So this is very important. Why India was protected from the Asian crisis, I should also say, being in Asia, and why India was protected from US crisis also, because of the proactive steps taken by the regulators. They were constantly working on their regulations, seeing whether these regulations have any loopholes, and they had issued various guidelines, take proactive actions, increased certain CRAR ratios or SLR or CRR ratios to match with this, manage the banking scenario with reverse repo or repo rates. That is their job. So these are the actions that a regulator takes when the crisis happens. Another aspect is consumer protection. I think Ashia has talked about that. Now, banking and financial services, everyone is a consumer. Even as an employee of the bank, I used to avail services from SBI. So at that point of time, I'm also a consumer. So consumer protection is very, very important. And you might have seen there are Consumer Protection Act is there. In fact, banking is such a thing where every law, I told you that every agency is keeping hawk's eye. Similarly, all the laws are basically moving towards banking and finance. So it's a Contract Act, it's a Negotiable Instrument Act, it's a Banking Regulation Act, है ना? I told Consumer Protection Act, SURFACE Act came for credit, and now NCLT and other IBCC. Every act is for the stability of the banking and financial system. And everywhere consumer is there. Now, what was happening? Recently, you might have seen that banks, RBI has issued one guideline. I would like to touch upon that. That any diversion of funds should be treated as a fraud. Okay. Now, with the manual system, when check was issued, it was very easy for a banker to keep track because they used to give the check in the name of the company, or and bankers used to know also that they are being paid for what reason. But with digitization, where volumes are generated every day, where the customer has been given account to handle and pay RTGS, NEFT directly to the beneficiary, it is very difficult for bankers to keep track of that. Subsequently, what was happening, there were a lot of fraud cases and a lot of employees were under scrutiny by the agencies. Now, frauds were declared because RBI has issued a set of guidelines. That was somewhere, some consumers or some creditors moved to the court that we are not getting opportunity to get heard, and hence, bank is deciding suo motu, which is a case of fraud or not. Like in willful defaulter case, they were being given opportunity. But in fraud cases, they were not being given opportunity because there is a direction from the regulators. So a few months ago, there is a judgment from Supreme Court, I think it's almost a year ago, when they say you must give opportunity to the creditor to present his case before declaration of a case as a fraud case. So somewhere, regulations are there, but the lawyer's role is to see whether the justice is being done to both sides or not. So this regulation now, the guidelines will change, of course. So these are very important where consumer is protected under the act, and the lawyer's job is to protect both sides, see that the consumer and the service provider also do not get impacted. Now, when you follow the regulations and rules, banking laws, it gives market a confidence. And then investors come in. You might have seen the rating agencies also see how many deviations you have done on a regulatory guidelines. So if there are deviations, if there are penalties imposed by regulators, many banks are getting penalized for KYC, know your customer. So if that is a lot of penalties are imposed lot many times, the rating will go down. If the rating will go down, their fund raising capability will go down. They may not be able to raise funds. So for banking sector or for the finance sector, following these regulations are very, very important. Now, for a healthy economic growth, this is also very important. You might have seen for last 10 years, we are saying that country is doing very well, country is growing on economic path. In last 10 years, or 15 years, I should say, whatever crisis was there on credit side, that was handled by the government or by the banks or by the regulators in a way that today your NPA percentage is much below 1%. That gives confidence. And it's not only NPA percentage, it is slippages ratio is also very low. So they know that in future also assets are safe, assets are not bad. Banks have not booked bad assets. So these, and why? Because regulations came. NCLT, this IBCC was formulated. Way was given to the promoters also. Bankruptcy Act was promulgated, and opportunity was given to them to sell off, to dispose of assets, to sell and come out of debts by a concrete plan. That helped the market, that helped the sentiments, that helped country to move forward on an economic growth path. I have already talked about global perspective. For me, since I have handled country risk and bank exposure, I used to set up a limit on banks taking exposures. I remember when I was in central office, I was scale 4, and fixing limits on foreign commercial banks. We always used to consider the banks where they are operating. If the banks are operating in high risk countries, we were not taking exposures. So anywhere the regulations are to see, Reserve Bank has a guideline that if any creditor has an exposure above 20% of 25% of turnover to one particular country, that exposure provision, extra provision has to be made by the bank if they have given the loan to that entity. So this that is very important. So if I'm dealing with Citibank and Citibank is operating in Africa, then I have to factor in that. What is the rating of Africa? Whether the fund will be coming back from Africa to us or not, if we are taking exposure in money market or forex. So globalization has opened up opportunities also, and put a threat also and challenges also on stabilization of system. With globalization, Basel norms came into play, and banks are required to maintain minimum capital adequacy ratio as per Basel III now. Now, there is an issue. Prior to Basel norm, Reserve Bank had a SLR and CRR concept. Instead of having a minimum capital, they used to say, okay, you maintain SLR and CRR with us, that will protect you in case of crisis. But with globalization, when international banks sat together in Basel, they found a common criteria, and that was Basel I and Basel II norms came into, and subsequently Basel III. Then some of the uh, top heads of public sector banks as well as private banks have questioned whether maintaining CRR is important now, because we are maintaining CRAR. And on CRR, 4% or 4.5%, whatever banks are maintaining as per regulatory prescription, they don't get any interest. So that much fund is blocked. If that much fund is released to the banking system, I think credit flow will happen, and maybe interest rate, if today interest rate is high, it can be brought down. So there is a double regulation. But as long as RBI is basically forcing us to adhere to that, banks, that will be adhered to. So these are the things which, as a lawyer also, you have to see whether this can be somewhere uh, put forward to Reserve Bank or the other regulators as a suggestion, because this is putting pressure on the financial system, which has the capability, which may not be having more capability. They are raising funds at 9%, so they will be lending at 15%. If banks are lending to NBFCs at a 9 to 10% or 11%, they will be lending at 20% plus, because their cost is also much there. So how to bring down the rate? These regulations are to be examined in deep. In innovation and competition is, I told you, when competitors are there, a banking canvas is changed. We never imagined that SBI will come out with YONO app in 2017. We were the first one because we were facing challenges from fintech, various challenges. Prior to that, we came out with SBI Buddy, which is a wallet. So similar kind of thing. So when we are NPCI came, UPI came, SBI was having SBI Pay separately. Then regulators force us to be part of NPCI platform only. So all banks joined hands together. Those are throwing challenges also for banks, because bank can develop separate platform to handle their own customers. Data privacy may be compromised by third party also, because your things are moved towards various kinds of platforms. So these are the regulations which are being imposed also, and which need to be re-examined. Unless until you know that in detail, you may not be able to suggest. And I always feel that suggestion and innovations and thinking is needed by everyone. Recent changes in regulatory framework, if I talked about, strengthening of prudential norms have happened. So from SURFACE Act, one more thought that I want to share with this platform, because you all are from legal fraternity. I don't know why SURFACE Act, when it was introduced, I didn't find a single reference that, sorry, for seizure of mortgage property, a banker need a permission from the district authorities. But every time it is happening that a banker moves to the district authority, because they say it's a law and order issue. If you seek police protection, you are going to a place, you are basically locking the premises. You need a police protection also. When you seek a police protection, they will not give you permission. District authority will not give you permission. It has happened in many cases. So as a norm, as a practice, although regulation is not there, but it has been enforced on banks to seek district authorities' permission for seizure of properties. So somewhere, and our law fraternity, who are basically guiding us on that, has to think what is the way out. Same thing is happening. You might have seen in NCLT also. A lot of changes are being brought over because of certain inputs that is being received. Enhanced oversight and supervision has happened. The Reserve Bank of India off-site audit, on-site audit. They get recently they have yesterday, day before yesterday, they launched sorry, they launched a portal, Pravah, now where online applications can be submitted, online things can happen. For consumers, they have ombudsman scheme. They have centralized that recently. Every day they are bringing in changes and they are updating, digitizing their process. I have a RBI app on my mobile where I get all the regulations, notifications on time, everything. So they are also changing. So this is a supervisory concerns are being addressed. You might have seen when Yes Bank failed, how proactively RBI took measure, and not more than 30 days. They had only taken 30 days to stabilize the system. No customers faced the loss, no customers suffered, and I think bank is on growth path because they are being managed and overlooked and supervised very properly now. With digitization, the real challenge has come of cyber frauds. And you might have known cyber law is still not very effective or not very I think it is also evolving. So people are being duped by various fraudsters and scamsters, and they don't have the mean to approach cybersecurity departments of various state agencies immediately. So something has to be done on this front. Uh, I think if awareness campaign about the law, if the law is effective, then awareness campaign about cybersecurity law is also very important. Data privacy and protection is a very, very important aspect. Today, I went to buy one thing and they asked me, what is your mobile number? I'm like, is it necessary? You are swiping my card. I will get a message on my mobile because that is available with the card company. Why you are asking me? He said, okay, fine. So uh, I can give you another example. You all are going to a restaurant and they are prohibited to load service charge on a customer. It's a discretionary thing, but they compulsorily they will uh, load that. Unless until you ask them to remove from the bill, they will not remove it. So many a times consumers are not aware that they need to tell, they need not to load service charges, and they are trapped. Similarly, in banking also, unnecessary charges, many banks or financial institutions maybe leave it. So here the consumer protection we have talked about. I'm not talking much in detail areas because it will be a time-taking thing. And I think the purpose of the course is to give you in detail. But data protection is very important because your entire data is going to various agencies, various vendors. If you are taking home loan, it is going to home loan sourcing team. From home loan sourcing team, it will come to bank. From bank, again, it will go to a collection team. So your data, whether it's safe or not. So the data protection law, we need to examine very, very deeply and see what we can do to streamline the process, which helps customer as well as banking and financial institutions. I think in the course objective, I have gone through your mail, and the objective of the course is to equip all the participants with a thorough understanding of the key principles and legal frameworks in banking and financial regulation, analyze significant case studies to illustrate how these laws apply in real-world scenario. That is very important. If you analyze Enron cases, if you analyze Yes Bank cases, if you analyze DHFL case, if you analyze global crisis of 2008, you will be able to know where we are hit. There are in forex area arbitrage opportunities or contracts are violated. You may be knowing there is a UPC. Yeah, UPC 600 is followed when we deal with letter of credit or collection of documents in exports and imports mostly. Many countries do not follow that. Iran never followed that. Initially, I'm not aware of recent. Like when I was handling, China was not following that. How to protect your exporters and importers. So that way, these things are very, very important to analyze different cases, different studies, enhance your ability to foresee potential and legal challenges and navigate through them effectively. That is the purpose of the course, is to make you, equip you, make you capable to navigate through and to see through the potential challenges, and then ring fence the system, ring fence everyone who is involved in that, whether it's a consumer or whether it's a financial system. Foster a network of professionals. I think when you will be interacting, you will be developing your own network who can share best practices and innovative strategies and compliances. So as we embark upon on this comprehensive journey through the landscape of banking, law, and financial regulations, let us be keen in our pursuit of knowledge and rigorous in our application of what we learn. The expertise you gain here will not only be a stepping stone in your career, but also a fortress safeguarding your professional practices. And ethics is the cornerstone, and ethics will always be at the center because you all are protector of ethical and moral values. Thank you all for your attention and commitment to advancing your understanding in this vital field. Let's get started and make the most of this incredible learning opportunity. Thank you. Thank you, everyone.